what makes your approach or style stand out when it comes to lending?
I mean, I've closed thousands of transactions over my career. I've been doing it for 22 years. And so I've seen about everything.
What's your dream vacation when you finally get to unplug?
I'm taking my kids to Kauai in December. I've never been to Hawaii. I'm looking forward to that. The place that I want to go is I want to go to Iceland.
What is the most used app on your phone right now, would you say?
A mortgage calculator app's probably the one I use the most. I would say that and ChatGPT, those two. Probably more mortgage calculator than the ChatGPT.
What's your favorite way to recharge outside of work?
I like to be in the mountains, whether I'm mountain biking, whether I'm trail running with my wife, skiing, that for me. I do that every Saturday.
Honey, who are we gonna get to help us move?
I'll see if Brad can give us a hand. Hey Brad, what you doing, buddy? Well, we're moving today and I was wondering if you could help us out.
I'd rather wax the hair off my head. No. I'd rather go 10 rounds with Mike Tyson. Oh my gosh. I'd rather let my dog...
Friends don't want to help you move. Call Miracle Movers, and we'll take the pain and stress of moving off your hands.
Welcome to the Closing Table. It's the podcast where we speak with Utah's top real estate professionals, and they share their stories, strategies, and behind-the-scenes hustle that leads to big wins in the market. I'm your host, Landon Franchow, President and CEO of Miracle Movers and Storage, and today I'm sitting down with Jerry Nilsson, he's a senior mortgage advisor for Legacy Mutual Mortgage. Thank you so much for joining me.
Yeah, thanks for having me on, Landon. Appreciate it.
When I was thinking mortgage specialist, I was like, who better than the person that helped me get my house?
Right?
Yeah,
and let you keep your other house.
I know.
So.
You really, I don't know the whiteout you needed to use or,
Let's keep that off the record.
Massage. No, I'm just kidding. I'm just kidding. But like the creative financing that allowed us to keep our old home, turn it into an investment property, and buy a house and upgrade and get a much better home than we were living in. Like, I couldn't thank you enough for all of that.
Well, it was an honor to work with you and Amanda. So.
Yeah, and I'll tell you what, like our last home buying process, in part to the lender, was a nightmare, absolute nightmare. And I don't know if you remember, but Amanda's like, is this what buying a house should be like? And I think you're like, yeah. Like
normally, yes.
I was like,
occasionally we'll have issues.
I was worried. I was like, this is a little too easy. And so I think that speaks volumes to what you do and what you can pull off in your experience. And I don't know much about like mortgage brokers versus mortgage, just like lenders,
mortgage lenders, banks.
Yeah. And so like, that's kind of what we ran into last time. It was kind of a mortgage broker situation and it was during COVID and, some people lost their jobs in the middle of the underwriting process and people were working from home during the underwriting process and the loan type was changed in the middle of the underwriting process. And so it was like, oh my gosh, we were just like drug around, like what's going to happen next. And so just thank you.
Yeah.
Thank you so much.
You're welcome. So we try to provide a really smooth, it's a really stressful process, right? I tell my clients that, getting a mortgage is a financial colonoscopy. They're gonna ask you for everything, right?
Yeah.
And so we try to get most of the documents up front, and we're anticipating what the underwriter's gonna say and ask for, and we're asking for that up front. So there's not this like multiple going back. Well, we need this. Oh, we need this. We need this. We need this. And you get deal fatigue, right?
Yeah.
And during COVID was tough because during that process, I'll give your other lender a break on they were changing guidelines on us on a weekly basis. People were losing jobs and so it was a bit of a nightmare for that.
Yeah.
Especially if it was the initial, as things shut down, that was kind of a disaster.
June of 2020.
Yeah, that was right at the beginning.
I don't like to throw shade on anybody else. And I understand that like we were not dealing with normal things.
No,
so
it was crazy back then.
It was nuts, but
I had one client that was under contract on a Fieldstone home, and she put it under contract it would have been November of 19, right?
Yeah.
So prices were still, they were
Low.
down, right? They hadn't spiked yet. And she was supposed to close in May of 2020. Okay.
Okay.
So right after things shut down.
Yeah.
And she walked from the contract. She was under contract on that home, and it was a new construction.
Yeah.
For probably $440, right?
Oh no.
And when she walked, she said, "Oh well, these homes are going to be $40,000 less next month." And I said, "I don't think so. Like, there's still demand, even though
Yeah.
the builder, to credit, tried to do everything to keep her in the deal. They did offer her a discount, and she walked, and she's out $200,000 in equity from,
Oh.
It goes back to this saying that, Warren Buffett always says he's fearful when people are greedy, and he's greedy when people are fearful.
Yeah.
That first, couple of months during COVID, people were really fearful, and there were opportunities then. And then 3-4 months later, rates dropped, people started buying, and then you had that run up for 2 years where we were seeing 20% appreciation throughout the market.
Yeah.
So
$100,000 in equity, 6 months like that.
Yeah.
I was like, whoa.
Yeah.
It was a wild time. And so
It was.
I would love to hear more about what makes the Federal Reserve drop interest rates. Is it usually only in times of financial crisis, or it seems like the only time that happens is when something crazy happens?
Yeah. So what made mortgage rates go down to 3% was the fact that the Federal Reserve was buying $100 billion of mortgage-backed securities a month.
Okay.
And so they were keeping them artificially low.
Gotcha.
Right? And they did that for 2020. They call it quantitative easing is the term they use.
Yeah.
Which is just essentially, imagine you using your credit card every month and then going and getting another credit card the next month on a 0% interest loan and compounding that. What does that do to your finances a year later?
Yeah.
Right?
Yeah, absolutely.
So that's what happened, in 2020, 2022, they should have stopped the quantitative easing.
Yeah.
And they didn't do that till 23. And that's when you saw the mortgage rates go from 3% to 5% like that, right? And then, but we had a 4-point interest increase in a matter of a year.
Yeah.
Probably 6 months, actually. So
we always, in my industry, there was so much happening with the market and so much market fluidity and tons of homes on the market, tons of homes selling, right? We called it the gold rush for my industry.
Yeah.
There was more demand than what the moving companies could service. You know what I mean? And so we obviously, in our industry, we would love to see that again. I'd love to see 3% interest rates.
I don't think that'll happen in our lifetime again, and I don't want it to. Because what happens is people are going to spend what they can afford on a house. And so if interest rates are 3%, rates are 6% right now, okay? And so for every 1% decrease in interest rates, a person's buying power increases by 12%.
Yeah.
So if you saw interest rates drop 2%, you would probably see a 15 to 20% appreciation in home value just because of the affordability factor now.
Yeah.
And then for all my kids that are, in college now that want to buy houses, right? The barrier to entry for them is so massive.
Yeah.
And so it just gets really, really difficult to get in for the first time home buyers, right?
Yeah.
We became California during COVID.
Yeah.
In the Salt Lake Valley. Well, Wasatch Front.
I'm literally hanging on to my house in Magna because I'm worried about my kids' generation being able to afford a house.
Yeah.
I'm that's literally what I'm saying.
Well, and what's your interest rate at?
2.75.
So you should never sell that house.
Ever.
With that rate.
No.
Because that will just print money year over year over year when you rent it out, right?
Yeah. That's the days of being able to put 3% down on a house and then cash flow as a rental immediately. dead
Yeah.
and gone, right?
Correct.
And so, I came to your in real estate investing seminar,
Yeah.
or no, it was the first time home buyer, but you talked a lot about investing and there's you got to rent out all the rooms and get like 6 separate tenants and do some really weird stuff to be able to buy an investment property and just like automatically not be in the hole, still paying for the mortgage on top of having the rent. And so
Right now, to make like things just break even, you've got to put about 25% down.
okay, yeah, well that's that's a requirement too, right?
I mean,
In
you
some
can
cases?
you can buy investment properties with as little as 15% down.
Okay.
In Utah though, it doesn't cash flow, and so you're going to have a negative cash flow each month. So
Unless it's some weird, crazy tree house that has
Yeah.
100% booking rate on Airbnb. Or,
totally.
But how did your journey into real estate begin? When did it begin?
So right out of college, I started working for a company. And my background, I went to college. I have a degree in biology and a minor in chemistry. I went to BYU. And I was pre-med. And in my junior year, I was getting ready to take the MCAT. And I just decided I didn't want to do it. And throughout college, I had always been working in sales jobs. And I knew I was really good at sales. So right out of college, I took a job doing outside sales for a cell phone company.
Okay.
And then I rolled from that job into doing outside sales for a hardwood lumber company called National Wood Products here in Salt Lake. Great company. I was low man on the totem pole, and when there was a recession after 9/11,
Yeah.
and so I got let go. And I had just bought a house about 6 months before, and I called up my loan officer who helped me buy my house, and I said, I think I want to go into real estate.
Yeah.
And so I looked at lending, I looked at real estate, and I'm like, I think I'm better suited to do the real estate side of things instead of talking about kitchens and floor plans and colors, right? Like that,
The natural light.
The natural light, yeah. Or does this have an elevator? So I got into lending, and it's had its ups and downs. But that's kind of how I got into it. I got laid off from a job. We just bought our first home. We just had our first kid, and I decided at that point I didn't want to ever be beholden to anybody else for my ability to make money.
Yeah.
And so I went out and just started doing my own thing.
Wonderful. What makes your approach or style stand out when it comes to lending? And
I mean, I've closed thousands of transactions over my career. I've been doing it for 22 years. And so I've seen about everything. In fact, I had a client earlier this week call me, and he won $2.5 million off of DraftKings. No, I'm serious. I was like, I'm like, there's no way, right? Like,
Yeah.
Because you hear wild stuff. You
Yeah.
see everybody's finances. You see everybody's credit, right? So
Yeah.
I'm skeptical. And no, he sends me his bank statement. And there's money there. He sends me the DraftKings, transfer, right? Like it's all there. And so, he's under contract to buy this $1 million house.
yeah.
He's self-employed, and so a lot of self-employed borrowers will write off all their income that they possibly can, so they don't have to pay taxes.
Yeah.
And so, I talked to one of our portfolio lenders that we broker to. So we're a mortgage bank. We lend the money directly,
Yeah.
but we do have the option of doing broker on certain types of products.
Yeah.
And so I do a lot of different types of loans. And this loan that we were doing is called a no-doc loan, meaning we look at his bank statements and we look at his credit.
Yeah.
And he puts down 20%.
Okay.
There's no other. And so, we got him pre-approved. He's under contract, and, we'll close that deal.
Okay. Do you know what the bet was?
He told me he's playing video poker.
Oh, okay.
Yeah, I thought it was maybe some football bet, and he had a major parlay that came through, right?
Yeah.
But no, it was like video poker, And my question after I said, well, so what's your net? Like, what have you spent over the last 10 years playing video for? He's like, I don't know. So
He
like,
just broke even.
But he's like, it's not $2.5 million. I know that. So
That's
and so like what we're really good at is, like I said, I've seen everything, and I think like an underwriter, and I can poke holes in a deal just on a phone. Like I can have a 5-minute phone call with a client and be like, yeah, we can make that work, or okay, we got to do this, we got to fix this. And so I'm trying to anticipate any kind of issue that they're going to run into during underwriting, and we address it up front. Yeah. And then when you address it up front, it's a smooth transaction. If you just throw something up on the wall and then hope and pray that it closes, the underwriter is going to see that. They're going to see that you weren't diligent in your, and then they're going to start ripping the file open and throwing red flags up everywhere.
Yeah.
So.
Yeah, I mean, being self-employed and my business being in its infancy and buying our last house was tough. Being self-employed, and so I learned from that on how to set myself up on paper to have payroll and show that I have a job. All those little things, because they were like, I can't do anything with this with your 1 year of tax returns. That's So I definitely learned from that on the first house. What's happening in the Utah market right now? Like, how would you best describe that?
The Utah market's softening. So we have a 10-year high in interest in inventory. So there's more homes on the market than there have been in 10 years.
Wow.
Which is a great buying opportunity.
Yeah.
Okay. So no longer is it a seller's market. No longer can they throw out some pie in the sky purchase price, sales price, and then get it, right?
Yeah.
So with fewer buyers in the market, sellers are having to either come down in price reductions, or they're needing to do they're offering seller concessions to help with closing costs and to help with interest rate buy downs, and so it's a good time. It's a really good time to be looking. I've started looking again. I like to invest in real estate. I've looked at 3 deals alone this week. That one I didn't pull the trigger on fast enough, but I had to talk to my CPA beforehand, so I knew what my liabilities. I just finished my taxes for 24.
Okay.
And it's not October 15th yet, so I'm okay.
You're good.
The
extension, it's all good.
Exactly.
Yeah.
But why procrastinate why do what you can procrastinate later down the road when it comes to taxes?
Oh yeah. Don't pay too quick. Just
finalize.
We're not in a hurry here.
Totally. So I think there's a great buying opportunity. I'm seeing a lot of interesting stuff that I haven't seen in 6 months.
Okay. Yeah. When we were looking in the winter time, and we're like, better make it quick, because summer's going to come here, summer's coming, and prices are going to go up. There's going to be more people. Yeah. And it seemed to have just kind of stay that way. Yeah. And
there's a lot of fear. There's a lot of fear with the economy. There's a lot of misconception that a lot of people think that interest rates are going to come down. They're going to wait till they come down to 3 or 4%. And that's not reality. I mean, we're still at historic lows, being in the low to mid 6s right now. It's still, my parents, I think their first interest rate on a home was 15 or 17%.
Yeah. I mean, that was normal way back then. And so there's a lot of people I know that sat on the sidelines during COVID and didn't jump on something that we're looking at a house, and they're like, maybe next year. And next year it was unaffordable. Next year they didn't qualify for that.
Next year the rates are too high.
Next year the rates went up. And so, historically, 5% appreciation in real estate. It's almost like the stock market. It has it has peaks and valleys, but ultimately it goes up. So.
Well, and especially in our market, we've got like a 40,000 housing unit shortage right now.
It's because of our geographics.
Mm-hmm. It's our geographics and our demographics.
Yeah.
And the home builders slowed down during the Great Recession. Mm-hmm. They didn't bring in so many lots into market, and and that was because the banking froze up.
Yeah.
and then COVID exacerbated those problems, and so you're seeing that come through now.
Yeah.
And that's going to take 10 years to fix that problem.
Yeah.
With the amount of people that are moving here, and then builders can only build so many homes, right? There's only so much labor force that.
Yeah. Well, I know you don't have like a magic crystal ball, but where do you see things going in the next 5 years or so?
Yeah, I am always a big proponent of long-term holding on real estate.
Yeah.
I'll just go back and, my first property we bought was a townhome in South Jordan in 2002. And I paid $153,000 for that townhome, and it was off a Redwood Road and about 104th. Mm-hmm. And at the time, people were like, "Oh, Jerry, I don't know, you shouldn't buy that." And townhomes just don't appreciate like a single family home does. Well, I was right out of college, right? Like I was making, I don't know, $45,000 a year.
Yeah.
And that's all we could afford. And I wanted to live in that area. I liked that area.
Yeah.
And so we bought it, right? And the market went through the spike during, the run up to the Great Recession. Mm-hmm. And at the peak of the market, we could have sold it for like $350.
Yeah.
And we sold it in 2011, and we thought we'd be there for 2 years and move, and it didn't happen, right? And so we sold it in 2011. We sold it for $185,000. And people are like, "Oh, well, you lost so much money." I'm like, "Well, did I? I paid $153 for it. I paid principal on it. I wrote off a bunch of interest on it. I sold it for $185.
Yeah.
I still walked away with money, right?"
Yeah.
And at the time, had I sold it during the peak at $350, well, I would have had a lot more equity, but I would also go be buying in at a higher price point too.
Right.
Right. So that money would have been, it would have been funny money.
Mm-hmm.
Right.
Yeah.
So if you're holding homes long term, you're going to be fine. Regardless, if you bought a home now and you hold it for 5 years, based on our demographic and the shortage we have, you'll be fine.
Yeah.
The next house we bought, we paid, this is a great one. This was, you'll love this one. I've got some creative deals I've done over the years, but this one was a good one. I did a lease option on this house. I lived in it for 2 years. I took all of my rent, not portion of it, all of my rent, was used towards the principal balance on the loan to pay down the option price.
Yeah.
And when I bought it, I used a loan with a local credit union because we couldn't get it done conventionally the way I wanted to do it.
Yeah.
And we used all that money over the last 2 years, which was like, I think it was like $36,000. And we used that as the down payment to buy the house.
That's what's up.
So I never put any money down on it.
That's cool.
Just used the rent, right? And they allowed us to use that rent as our earnest money and down payment.
That's super creative. I've never heard of that.
Yeah, and then we lived in it for a few years. I think we sold it for like $440, something like that. And then we bought our current house in August of 2019, right before COVID.
Just right there.
Right?
Yeah.
And at the time, when we were under contract on that house, and this is a funny story. So we're living in our second house that we bought on lease option, right? And my kids had gotten older. I had 2 teenagers at the time. And teenagers just take up more space. And I've got 4 kids total.
Yeah.
And we were trying to find a couch for our family room that would fit all of us. And we decided we couldn't find a couch that would fit all of us to be in there. And then we're like, we think our house is too small.
Yeah.
Right. And it was before they were driving, right? So there weren't car issues, but it was a small home. And so we found this house after probably 6 months of looking, bought it. And at the time when I was buying it, I had people telling me, "Oh man, the market's going to crash." And, I don't think that's a good idea.
Yeah.
One person told my wife that, and it's a good sized house. It's like 5,000 square feet.
Yeah.
And in South Jordan.
South Jordan.
And, somebody said to my wife, "Well, who's going to clean it?" Right. Like, yeah, just all the poor pride BS that anybody, right? It blew my mind. And I said, well, did you tell her that we'll just have a housekeeper clean it?
Yeah,
Like,
the maid,
like,
right? I mean,
yeah, the in-house maid, like,
live in.
The live-in maid. So, full disclosure, we don't have an in-house maid. So. But we do have a house cleaner that comes, and they're amazing.
Yeah.
Anyway, every time I've gone and bought real estate, somebody's told me, like, it's a bad idea.
Yeah.
And as long as you can afford it, and as long as you're going to hold it for long term, you're going to be fine.
Yeah.
If you try to buy something and you think, hey, if the market's going to go up in 2 years, I'm going to flip it. And if that's your exit strategy, you're probably going to get screwed at some point.
Sure.
But if you're buying long term and then something happens and you can sell it and you can make money, great, do it. But if your exit is, well, I'm going to flip it in 6 months or a year, you could. But
maybe
you might not, right?
Yeah, it could happen.
Long term, you're going to be fine.
Sure. Yeah. I mean, I obviously think of real estate as an investment more than a roof over my head. It's both, obviously, but buying our house and having an unfinished basement, and I'm like, what can I do to add value to this place long term? But like, I plan on being at our house for 10 years plus.
Yeah.
Like I don't, unless I win $2.5 million on DraftKings, but I told Amanda, I told my wife Amanda, I said we're probably going to be here until we sell our company.
Yeah.
Which is possibly 10 years from now, and so we'll be here for a while.
Yeah.
And
that's the way it should be, right?
Yeah.
Like, because then when time solves all real estate problems. Mm-hmm. Like you can mess up on a buy, and that's where you make your money, right?
Yeah.
You make your money on the buy. And the longer you hold it, the more values go up over time, the more cycles you have, and it just continues to increase.
Yeah.
It's that short-term window of, 1 to 2 to 3 years is where you can see cycles that catch you, right?
Yeah. Yeah. I mean, I heard this from you, and I obviously knew this before. Building real wealth in real estate isn't buying and holding. But I'll tell you what, I can tell you it was super tempting to sell that house and put like $250,000 in our pocket. I was like, we could, I don't know. But
there's comes times where you want to do that. With that interest rate though, that interest rate is so valuable.
I know. Yeah.
You can't borrow money for that. That is lower than inflation.
Yeah.
So you're printing money off of that.
Yeah. Yeah. And that's
because if you go out and buy an investment today, your rate's at 7%, and now you don't cash flow. What's your cash flow per month?
$700 a month.
Yeah.
Yeah. So as
rents go up.
Yeah.
You make more and more.
Yeah. I mean, the base rent it's a reasonable rate. It's not anything crazy. And it's just our mortgage is so low.
Yep.
And so that's where I'm like, this is going to continue to pay $700 a month after month, year after year. And I like that a lot more than having some couple $100,000 or whatever. It's like, you always have that.
Yeah. And you'll have a paid off house too.
Yeah, house will be paid off eventually, and then if real estate keeps doing what it's doing, or Magna has a revitalization, or I call it the sugar house effect, where like old historic homes are now worth over $1 million for a 3-bedroom bungalow. You know what I mean? And it's. Yeah, like I always believe that'll happen out there eventually, living next to the mountains and stuff.
Yeah, definitely.
But let's see here. Well, we've really, I had all these questions for you, but, I know you. I love talking. This has been like a really nice, like free-flowing conversation. And I really appreciate you coming on. What we're going to do real quick is called the rapid fire round, where I ask you a few questions and just give me your best quick answers.
Okay.
What is your favorite local lunch spot after a long showing day?
I love Tacos Lopez.
Where's that at?
It's off of 7200 South and Redwood. They've got some of the best like tacos.
I'll have to tell Amanda about that.
Yeah.
Shout out Tacos Lopez. What's your dream vacation when you finally get to unplug?
I'm taking my kids to Kauai in December. I've never been to Hawaii. I'm looking forward to that. The place that I want to go is I want to go to Iceland.
Okay.
Yeah.
You gonna bake bread in the heated, or I saw something on some travel show where they're baking bread in the hot pots.
In the hot pots?
Yeah.
That'd be cool. I love the fact that my phone probably wouldn't work.
Yeah.
That's always nice. That's always a positive for a vacation.
Yeah.
And then I don't like the summer. Like I don't like the heat. And so the thought of going to Iceland when it's 100 degrees here sounds amazing.
Iceland looks really cool.
Plus it looks cool.
Yeah.
And then I want to you can scuba dive or you can snorkel right between the tectonic plates, the two.
What?
Yeah.
Okay.
And I think that'd be cool too.
That would be cool.
Yeah.
What is the most used app on your phone right now, would you say?
A mortgage calculator app's probably the one I use the most.
Yeah.
Yeah.
What's your favorite way to recharge outside of work?
I would say that and ChatGPT.
Yeah.
Those two.
Yeah, I would say
Probably more mortgage calculator than the ChatGPT, but
yeah.
Yeah.
What's your favorite way to recharge outside of work?
I like to be in the mountains, whether I'm mountain biking, whether I'm trail running with my wife, skiing, that for me. I do that every Saturday. That's kind of like my, running your own business is stressful, right? Mm-hmm. There's not a lot of time during the week that you can check out. Yeah. And I have a really hard time shutting my brain off anyway. I mean, I'll wake up at 4. I woke up at 4 this morning coming up with a solution for a deal. Yeah. And that's the way it probably goes twice a week for me. And so Saturdays are always nice to get out on my mountain bike. And then when I'm skiing, when I'm mountain biking, trail running, my brain's not in work mode and it just shuts down and I'm only thinking about that ride or that trail run. So
shutting work off mentally is difficult.
Yes.
When it's all on your shoulders.
Totally.
It's so difficult.
Yes. But that 3 or 4 hours makes a big difference.
Oh, yeah. So. We don't travel out of because it's fun. We travel because it's an absolute necessity.
Yeah.
Because if we go 6 months of working all the time, mm-hmm. it'll start to affect us physically. And so we have to disconnect at least once every 3 months because we're not our best selves if we don't.
Yeah.
So it's really hard to get out of that mode. And so.
And I'm a workaholic and I struggle going on vacation.
Mm-hmm. Yeah.
So I need to do more of it. My wife's always like, we need to go on a trip. And I'm like, I know.
I mean, some of the stress and pressure and things that go on, it's enough to make you sick.
Yeah.
Right? Like it's one of those things that it could actually affect you physically, like shorten your life.
Oh yeah.
Definitely. And so I'm
Definitely.
like, we're trying to find that balance all the time, because we've been there where we're sleepless nights, heart's pounding out of your chest, mm-hmm. Cortisol levels through the roof.
Yep.
Yep. I love it. And real quick, Jerry, how can people connect with you if they want to buy, sell, or follow your journey?
I really don't do much on social, right? So my phone number is 801-808-3788. Shoot me a text. I'd love to connect with anybody that has questions. I'm here to be a resource. Yeah. And I'm to the point in my career, I don't need the business. Yeah. I want to help people. And so if it makes sense to go a different direction, they're always going to get that honesty from me.
Yeah. So if you have questions, call Jerry over at Legacy Mutual Mortgage.
Yeah, and you can email me at jerryteam@legacymutual.com.
Perfect. Yeah, a lot of people think that they already have this preconceived notion that it's not possible to buy a house, and they haven't talked to a mortgage expert yet.
Yeah.
They're just can't afford it.
Yeah, a lot of people discount themselves in their ability. They're like, or they're not willing to make the sacrifices to be able to buy. And I mean, I've got a client that's 23 years old that I helped him buy his 10th house this year.
That's what's up.
So, yeah.
All right.
There is a will. If there's a will, there's a way.
thanks again, Jerry, for joining us on the podcast today. If you're a real estate professional who's ready to sit at the closing table, shoot me a message. And if you want to work with a mover who treats your clients like family, you know where to find us. I'm Landon with Miracle Movers. We'll see you on the next episode.